1, 2, 3, let's go!
Hi, I'm Yael.
And I'm Ann. So welcome back to our podcast.
Glad to be here.
Okay, so what are we going to talk about today?
So I thought that we can go through the behind the scenes of a mortgage a little bit.
Oh my gosh, that's going to take hours. Nobody knows how many steps it takes to close a mortgage. I once wrote down the 101 steps from a lead to application.
It was 101?
It was 101.
Wow.
But then I added 2, it became 103, 104, and then I stopped. I just did it.
Yeah, it's sort of like the airplane analogy. You know, you go onto an airplane, you book your seat, you sit down, and then you land. But you don't really know what the pilot is doing or really what's going on behind the scenes.
And even when there's turbulence, the captain just kind of like glosses over it. Ladies and gentlemen, I just put on your fasten your seatbelt sign. There'll be a little bit of turbulence because of X, Y, and Z, but just it's okay, it's fine. And I've never been on a plane that turned upside down, so I don't care about it. I just fasten my seatbelt.
Right. So I think that's an interesting point because it's our job to let the clients know, hey, there's a little turbulence, but we've got you back.
Yeah, I'm thinking about something. Sometimes this happens. It's happened to me a few times, like at the closing date, like something that can go like majorly wrong in the the mind of the client. And that could be like, I had this happen a few times until we figured out a way to like nip it in the bud, was that basically people would get a last minute seller's concession.
What's a seller's concession?
So a seller's concession is when the seller basically at closing will agree to pay part of the client's closing costs or all the client's closing costs from the proceeds of the sale of the house.
Okay, so why does that affect the mortgage?
So like let's say for example somebody's buying a house for $700,000 and the seller offers to pay let's say $500 towards the buyer's closing costs.
Okay.
Now usually a seller's concession like that happens at the very end or in the middle of the process, maybe there was something that came up in the inspection report, or maybe when you're buying the house, you do a final walkthrough and something is not perfect. It could be they took away a chandelier and the person thought the chandelier was going to be in the house. So now the seller decides that they're going to give a credit of $500 towards their buyer, and at closing, we don't know about it, so we never put that on our closing documents.
Okay,
So,
and why? And it has to be there.
it has to be there because part of the closing, it has to be on the documents of closing that the seller is giving $500 towards the buyer.
It's part of the settlement statement.
Correct.
All right, so what happens?
So what happens? Well, when that happens, it's a major, major thing in the mortgage industry. Well, first of all, it starts in my office. So what happens in our office? We have our processors working locally on every file. The processor in the file has to stop what she's doing that moment because it's an emergency. They're closing today. And she has to readjust the file. What does that mean? Well, it's a paper adjustment. You go into the computer, you add in, there's a seller's concession. Then we have to redo our approvals because every approval has to match exactly to the settlement statement.
So you have to rerun it through Fannie Mae and Freddie Mac, through their systems.
We have to rerun it through whatever automatic underwriting systems required for that loan.
Okay.
So we run it through. So that takes a few minutes of time. Once it's done, we have to submit it back up to the underwriter.
Okay.
Because the underwriter has to with a clear to close file, has to unclear the close, has to re-underwrite the file, again, a few seconds. She has to stop whatever she's doing to review the file and re-clear it to close.
Now, what technical stuff has to be
So
taken
before
care
that, a whole bunch of things have to happen. We have to change our lock. When we lock a file, we say whether the seller's concession or not. So now we have to get a new lock. The lock has to be adjusted. That means our lock desk has to stop what they're doing to adjust their lock. The big one is we have to have it on the appraisal. That means our appraisal desk has to stop what they're doing, contact the appraiser, and the appraiser has to resend a report saying that this house that sold for $700,000 has a $500 seller's concession.
What about the contract?
The contract has to be, we need addendum to the contract showing that there's a $500 seller's concession. And the most important one is if we thought we were closing that day, the wire for the closing was already sent out. It has to be withdrawn. The closing docs have to be redone. New closing instructions regarding how much funds the client needs for closing have to be put on it. And the closing disclosure have to be resent with a new wire to the settlement agent.
And all this is for $500.
All this is because in this case, we're talking about $500. It could have been for $5,000 or $20,000.
And meanwhile, the buyer is like, why are we not closing?
Right, and it's all the bank's fault. We were supposed to close at 10 o'clock. Why aren't the documents good enough? How come it's 12 o'clock and it's not done yet? Why is it coming at 2 o'clock? Everyone's waiting for you. It's really not fair. You're incompetent. Why wasn't it done? So basically, a simple last-minute seller's concession could really throw a whole bank in a tizzy. And now, think about it. Think about your regular day, whatever you're doing. It could be that you're cooking something. Let's say you're cooking something. Yeah. I'm baking a cake. And I thought I had chocolate chips in my closet.
Okay.
And I walked in, I mix the cake, I go to get the chocolate chips, and I realize I don't have them. That means I have to stop what I'm doing, turn off all my appliances. I got to drive in my car and go to the store. I got to buy the chocolate chips. Then I have to come back, I have to start everything up again, and continue baking. So you know that if you're going to the store once a week and you have the chocolate chips in the bag, it's just part of your routine. Right. But if you have to stop what you're doing and stop your whole day because you forgot chocolate chips, it's almost that for us in our business, it completely stops the flow of work.
It's interesting because in one of my previous companies that I work with, if there was a last minute seller's concession or change, they postponed the closing till the next day. They weren't equipped to stop everything. So I actually think it's like a benefit that some banks are willing to stop what they're doing. That's actually a very good customer service.
I never thought of it that way, but you're right. That's a good thing that in our company we're able to accommodate a last minute change. But it really does stop the flow of our days, and the client doesn't know that.
Right.
So it's very hard to it's very easy in one hand to be able to anticipate something like that. That's if we know about it.
Yeah.
So has this ever happened to you?
It has happened to me. So because we've had those last minute things and we want to deliver a very smooth process, we ask along the way. I believe hyper communication is the key. So we in constant contact with the attorneys, have anything changed with the realtors, and thankfully we've been able to avoid it because we've had a couple of days to be able to make the changes. So
right.
We've been asking the questions. And normally if you're not experienced, you don't really know to ask those questions.
Well, I have to tell you something. I want to just say that this does not happen every day. It's probably something that happens to me once a year, but does happen once a year. Because like you, we ask the questions. And going back, I'm thinking about the ones that it came up with. We're licensed in a lot of states. In New York State, which is an attorney state, it really doesn't happen. Unless it's a last minute during the walkthrough and something happens last minute. But usually in New York State, the attorneys are very good about providing us the documents we need. But when we work with a lot of other states and we're relying on title companies and realtors to send us documents, we do have to ask a lot, and some realtors are better than others at paperwork, and most title companies they're very good at processing paperwork if they receive it. So the last time it happened to me was actually about 1.5 years ago. It was a Florida closing, and the realtor just neglected or forgot to send us addendum. But what we've been doing is 2 days before closing, when we send out our final CD 2 or 3 days before, we do send an email to the client reviewing all the terms of the loan. And we ask, is there a seller's concession? And we ask them to please respond yes or no to they received our acknowledged receipt. So some clients acknowledge receipt, say everything is good, and some clients don't. So this particular one, when it happened, they were really upset because it was a husband and wife, but the husband was the only one signing documents, and he was traveling. So he had a very important appointment at Tractor Supply. He had to buy some things for a property he had in Utah, and he was walking into Tractor Supply, and he only was at a location to close for a specific window of time. So they were very upset that his Tractor Supply appointment, I'm joking about it because he had a whole bunch of things to do, and then he was going to fly back to wherever he was from. And he wasn't able to juggle his day properly, and he was all upset. And they called me up and they said, how could you not have known? We negotiated this one. It was not $500. This case was $1,500. And I said, I sent you a pre-closing workout a few days ago. You never said there was a concession. Then they go, oh yeah, we didn't open the email, or we didn't look at it. And it turns out it was a missed addendum. So we took care of it, and they ended up getting documents, I think, at 2 o'clock instead of at 12 o'clock.
So what do you do about his missed Tractor Supply appointment?
They were very upset about it, but he closed anyway. But at night, she told me it was all my fault. And that's when I showed her. I said, hold on a second. I sent you a document, and you didn't say this happened. So,
Did you get a cheesecake?
No. But I didn't get a cheesecake. But at the end was that, truthfully, is that I explained to her, like you said, that you're lucky we accommodated it. And we were able to accommodate that it happened this day, not the next day, especially in this particular case, like other states which have like time of essence closings, you have to close that day. So we did get it done, but it was very stressful. I have to tell you something. We just discussed all the steps in our office. It's more stressful for our buyers than for us. Even though it stops our system and we're like, we got to stop what we're doing, everyone has to step up to the plate, from the processors, the underwriters, the lock desk, the appraiser, everyone has to step up to the plate. We're good at that, but our buyers are nervous and they're scared. So it's harder for the buyer than for us.
Makes sense. They're purchasing most likely the biggest purchase in their life. And then it's scary. Hey, what's going on? The documents, and you hear all these horror stories. So you gotta just, I do think communication is, we got you, there's a snag, we're not gonna sit there pointing fingers, but we're here to fix it.
100%. 100%. Pointing fingers, though, is fun sometimes, isn't it?
It's just a waste of time.
It's not productive.
I'm about time-saving activities.
You just get it done.
Yeah.
The truth of the matter is, it's the truth that we do. We just get it done.
Yeah.
Is there anything else like last minute internal that sometimes I'm trying to think of a whole bunch of things that the clients don't ever know about, like all the internal communication, like just in this example is the communication between all parties.
I had one now, which was interesting. The client, when we took their file, when we ran it through the automated system, the client had $200,000 in the bank. And they only needed $100 to finalize the transaction. And then when we got their updated bank statement, the latest one only had $100 in there. So apparently they put their money, they bought something. I think they bought a boat, something. So when we got their approval, it was because they didn't have the best credit, and the catalyst for the approval was the reserves, that they had so much extra money.
That's called compensating factors.
Yes.
And so compensating factors are so important.
Exactly. So we had this thing, everything's going good, and we had to rerun it now. And this wasn't the day of the closing, but we were trying to get them the final clear to close, and suddenly we didn't have an approval anymore because they didn't have money. So it was stressful on me. I'm like, oh my goodness, I issued a commitment, and it's null and void. And the client's like, what do you mean? I have my down payment on the line. We issued their money's on the line. It turns out they ended up getting a gift for that difference of the money. But we had to scramble a little bit.
That happens a lot also. That everyone talks about appraisal waivers. It's so exciting to get an appraisal waiver on a file. So there's so many factors behind an appraisal waiver. That basically means that we don't have to get a physical appraisal in the file. So it saves the client time and money. And especially in today's market where time is so key, or realtors are very nervous and hyper-focused, will a house appraise or not? It's something that comes up. So we had a file like this. We got an appraisal waiver. And literally 10 days before closing, similar to your situation, we ran our final, we have to run these AOSs, these automatic underwriting, and we didn't get the waiver.
You lost it.
And the difference, this is the funniest part, the difference between the reason why we lost when we played with the file was only $5. It was a condo, and the insurance for the condo came in a little bit higher than we expected, and if it was $5 less, we got it. $5 more, we didn't. So we ended up just lowering the mortgage amount by about $2,000, and everything was fine. But it's very scary when we get that, because here we think we're almost closing. Imagine what happened the day before closing.
And then if it happens the day before closing in an appraisal situation, and let's say it wasn't a matter of $5 and you would actually have to order an appraisal, there's a law that the borrower has to view the appraisal 3 days before the closing. The closing, my dear, can't happen.
Right, and not only that, what happens, let's talk about behind the scenes. Now we need an appraisal. We lost our approval. We have to go to our appraisal management. They have to order an appraisal. They have to get it scheduled. The realtors have to all be involved. They're all throwing up in tizzy, calling left and right. The seller's getting nervous. We have to wait for the appraisal to come in. We have to hope it comes in at value. We have to review the appraisal, sometimes do an appraisal review. It's CDA, they call it, an appraisal review. Then the client, of course, has to review the appraisal, and we go into closing. So these are the things that people feel, oh, it's so easy. I'll go just to anyone to get the loan. My cousin, he's has another job. He took his, he got a license. I'll just go with him. But the wherewithal to juggle and to move and to maneuver, it's that's why it's so important to have an expert always to take care of your mortgage, because you have so much on the line, and it's a big, big, big purchase. You want to make sure that it happens.
Yeah. No, I think that is, it's, so let's surmise a little bit. It's communication and expertise.
Correct. It's always important. It's so important. I have a question for you, Yael.
Sure.
Do you think it's unprofessional if we're doing a loan, let's say we have 60 days to close.
Okay.
Do you think it's unprofessional to delay ordering the appraisal or having an appraisal inspection till further into the process? And I'll tell you where this is coming from. Right now, I have a loan that's actually closing in a week.
Okay.
But this started a while ago. It was a condominium. So we ordered the appraisal, and the seller wasn't able to, she canceled the appraisal. Well, I ordered right away within the first 2 days.
So he canceled the inspection.
He canceled the inspection. When they wanted to reschedule the following week, I got a call from the buying agent and said, listen, we're concerned that this condo won't appraise, because the condominium is very specific to that development. And it seems that there was another condo that was under contract that was supposed to close within another 2 to 2.5 weeks. They said, why don't we just wait for that one to close and do the appraisal inspection afterwards, so that comparable could be included in the report. I said, no problem. We had like another 7 weeks at the time to close. Why not? In my mind, the appraisal needed to be in about 10 days before closing, 7 days before closing, the latest. So I said, fine. The listing agent was so mad at me. She told me I'm incompetent. I'm not looking for the best interest of her seller. The buyers had waived their appraisal contingency. So what's the difference? And then she starts to say, who's your appraiser? I want to find out. I'm checking out all the comps. And I just thought I didn't see any problem with it. And then, just in the same vein, I have another file now that's closing also now about 2.5 weeks. That also was a condominium someplace else. And we also ordered the appraisal. And I got a call from the agent to please postpone the appraisal inspection, because the listing agent told her that she thinks we'll have a better shot at getting the value if we waited till another one closed. So I have two situations. One, the listing agent is flying off a handle, and the other one, the listing agent is telling us to hold off so that we can get an appraisal that will work. So what do you feel about that?
I think that we work for the client. So listing agent is, protecting her client, and God bless her. But your job is to take care of your client. And if the client waived their inspection, then they can do an inspection the day after closing. It's none of her business. That's what I think. So I think that my mantra is client first. So whatever's the best thing for the client, you obviously would love to accommodate every other party. There's buyer's agent, there's a listing agent, there's a buyer's attorney, there's a seller's attorney, there's a seller, there's, so many people part of the transaction. But, you can't always make everybody happy.
It's true. I also agree with you. I think it's buyer first, but I just couldn't get over how angry she was. And she says, if I ever see your pre-approval, I will know that you guys don't do appraisals. And then she's going on and on and on. And I said the same thing to her. I said, listen, I told her, I understand that you're upset for your seller. And I understand your seller's upset, but there's nothing to be upset about.
Yeah, but if they waive the contingency, who cares?
They were concerned that they wouldn't close on time if they waited.
Do they have a contract?
Yeah, they have a contract, and they're closing on time. Everything is good.
Remind her about what the sanctity of a contract is.
Well, that's what I told her. I said, the contract says X, Y, and Z. We're going to close within the confines of the contract. There's nothing for you to worry about.
Right.
So she just was like, whoa.
All right, listen, you know what it seems like? She's not very busy. You don't have to worry about your pre-approvals.
Or it could be also her client was an elderly person, and they could have been it happened to be, she told me that. It could have been that they were just very nervous people.
I know, but that's our job to alleviate, that's, management, client management. So maybe she's not very good at her job.
So do you have clients that really are nervous and call you every day like that, and they make you kind of insane?
It doesn't make me insane. I understand it. I was nervous. When I go into something that I don't know, I'm also nervous.
So how do you handle that? You have a client who calls you every second, or a realtor calling you every second, like every day, like almost on speed dial. Done. What's going on? What's going on?
I try to listen. There's some people who are absolutely bonkers. You can't fix bonkers. However, the nervous clients, I make a deal. I'll say, how about this? I call you in the morning and before I leave. I love talking to you. And let's not even talk about your file. Let's talk about your kids. And I make a deal with them. And they usually feel good. If it's a person, there's some realtors they have one deal a year and they're just going to pay their taxes or something. So they think that by calling that makes a difference and they put you on speed dial. And sometimes a lot of times in order for me to focus on my work, I forward my calls to my office. So I just don't answer them. And I let them know, hi, we spoke 40 times already. When we have an answer, I'll give it to you. Don't worry. Continue worrying and continue driving everybody insane. Continue driving yourself up in tizzy.
It's a little extreme.
I know, but they're good. They're driving themselves crazy. I said, go ahead. It's not going to... Somebody else's actions really can't impact your life if you can't do anything about it. If you can help some, sure. But if they're crazy, what are you going to do?
The truth is that I think I agree with what you're saying, and I love your deal. That's all part of communication. But how to communicate with a client, it's everything. We have a client right now where it's not even a borrower, it's the borrower's father. And he's in charge of the borrower's money because she's part of an LLC, which is she thought it was a trust, but it's really an LLC where the whole family is involved in. I think it's trust to an LLC. It's very complicated. Bottom line is, the money is our borrower's money. The income is our borrower's income, but the father's in control.
Okay.
So we have to show the transfer of money, liquidation of funds. So we need to get it from him. And we were having trouble with our account check system. That's a system where we do an automatic recheck. Every single thing in the mortgage file is third-party checked. Your social security number, your name, your address, your assets, just your income. Everything is third-party checked. So we were having some trouble with that. And then we had another one. We needed a document. Whatever we needed from this man, he just needed to talk to us a lot. If you didn't pick up his phone, he called the main office to talk to the manager. And it just was, we've been getting through it. We're talking to him all the time. But the bottom line is, it's not just for me to have communication with my clients, which is very important to me, and I do that, but it's also my team. Because closing a mortgage, as we described earlier, is not a one-man shop. Anyone who's a one-man shop in a mortgage, and it's possible, you can wear a lot of hats.
Let me ask you a question.
Sure.
That father, who seems like a great dad, and he's very involved in his daughter's finances, where does he live?
Why?
Because somebody like that, if he was the type of guy that he's calling and then calling the main number and then calling managers, he probably is the nicest person, and I would probably invite him down to the office and say, why don't you sit here a little bit? Let's show it to you.
To tell you what we did actually with him, he was so nervous, we actually picked up his paperwork from his house.
Okay.
I went, and my processor, who never usually goes to people's houses, she actually went to his house. On the way home from work, she stopped by his house and picked up his paperwork because he was nervous about emailing and scanning. We do take care of people and accommodate people, especially local people. We do have local offices in different places. We do that.
I feel like that guy probably was more of not a techie kind of guy, and he probably needed to see a face, feel a little comfort.
And we did, that's true. But what I'm just saying is that he was so nervous, and some of our processors are so used to the email route, and the email, the texting, the WhatsApp route,
which is
and they had to pick up the phone. So that's it. We just always pick up the phone. He needs to talk to somebody.
Right.
He was actually very technical. He just didn't want to send his private documents. But at the end of the mortgage process, we so abused him with needing so much private documents, he got used to uploading things. Like he got used to that we can't pick everything up.
I feel like the in our world right now, we're so used to like email, texting, WhatsApp. Like my questions on my team, like when I first start with a client is, what's your preferred method of communication? Talking, texting, emailing, WhatsApp, Signal, and most people, 1 out of 10 maybe say talking. A lot of people prefer other method. Now, I prefer, like me personally, because I like to work with efficiencies, emails probably work well for me, but I do like to talk to people. I like to get a feel, I like to put my finger on the pulse. But when there's so much going on, it does make sense to utilize technology. So I get it. It is pretty, you hear all these scams. People get scammed, their paperwork get taken. I just got an email, an official looking something from Chase, a text, and I just didn't sound right to me. I called my bank from Chase, and they're like, no, we didn't send it. I'm like, we all get these, what do they call, vishing? I don't know. They have all these words and all these kind of scams. So people are nervous, and I feel like we have to be super cognizant of that fact and just alleviate the concern that we're on their side. We're not here. We do, in our company, we do have military grade backup. And we're very, very on top of the security, and it annoys me because everything gets encrypted. It makes my life annoying, but it's really, really for the privacy and for the sake of the client. Which clients get annoyed about it, but would you be more annoyed if your data got taken?
100%. But, when people call me and I ask them the same question as you, we have the same conversation, I always say we have to start with at least one conversation. I almost won't do a loan with somebody that I can't have a conversation with. Because there's so much I find out from the conversation. There's a reason why my files close on time. There's a reason why we don't have so much turbulence in our files. And the reason is, I feel, is that first contact of knowing what's going on. And you get that in a phone call, in person, on a Zoom. I think you don't get that by seeing stats. You don't get the picture. You don't get the story behind the file. And I think that's key in making everything go smooth. Every file that I know that doesn't go so smoothly is because it's something that we should have known an initial consult.
I agree with you. And I'll even tell you a story to reiterate that. About 2-3 years ago, I got a call from somebody asking me what my rates were. And I said, sure, I'll give it the rates. What do you want to do? He's like, I'm looking to refinance. So I said, okay, love to work on that for you. What's your current rate? And then my other question, which is not on a mortgage application, was, how long are you planning on staying in this house? And he told me probably a year and a half at most. So although his rate was probably at 6% and the rates at that time were at 3%, I advised him not to refinance because the closing costs wouldn't make up the difference. It takes a couple of years to make up the difference of the closing costs. And I said, I was very busy at that time, and I said, all right, so that's my advice. Bye. And I hung up. 2 years later, which was last year, he called me and he said, I'm buying a house now. And I said, and sometimes you can tell when people are rate shoppers. So I said, all right, I'd love to help you, blah, blah, blah. I said, call me after you call all the other people and, call me back. He goes, I'm not calling anybody else. I said, what do you mean? Your middle name is Rate Shopper. So he started laughing and he goes, it is my middle name. However, I'm not rate shopping. So I said, why? He goes, you don't remember me, do you? I'm like, no. And he's like, I called you. At the same time, he went on to like Rocket Mortgage online. He spoke to 2 other people and everybody, took an application and didn't bother the consult and didn't bother having the conversation. And I was the only one who told him, okay, you're not refinancing, yeah, bye. And after I followed up with an email and I showed him the closing costs and I showed him the math, numbers don't lie. And he understood that. And he realized that, I was a trustworthy source. I wasn't chasing him to get the deal. I was doing what was right for him. So I find that that reiterates your thing. You must have a conversation because you can do things online. You can talk to people, but you have to understand the motive. You have to understand the big picture. And as an experienced loan officer, you want to make decisions that are right for the client and not just because it looks good. Sometimes it doesn't, 1 + 1 doesn't equal 2 sometimes.
It's interesting. I used to have for years on my signature, "You mortgage expert for life." I have the same experience as you with a couple of clients. When they come back, they're like so devoted to you because they just trust you. They know you'll do the right thing for them. But going back to the initial conversation, I just recently got a call from somebody. Seemed pretty simple. He wanted to refinance a house that he was awarded to in a divorce. And when I spoke to him, it turns out that he and his ex owned a house. She had the kids. She was negligent in some way. He got the kids. She's paying him child support. And he also got the house. And this all happened in October of 2022. It's a sad story, but when I started to go deeper and deeper into it, it wasn't as cut and dried. Like the client knew what he knew. I spoke to his attorney who's handling his litigation on this situation. I spoke to his divorce attorney who handled it. And it turns out that the house was being paid on time. The mortgage was on time. October was awarded to him. The wife had to sign the deed over to him, which he did in December. The attorney who represented him on the deed sign-off was not the divorce attorney. And this attorney has a signed deed, and she put it away. She never filed it. So there's no filed deed showing that he's the owner of the house. And the attorney said, "I don't want to file the deed until I know you can get a mortgage." But it's a signed deed, so that's something separate. But it seems from January of this year until now, no one has paid this mortgage because the ex-wife signed over the house, so she's done. He had never paid the mortgage. He paid the mortgage from October until December. I don't know why he stopped paying it. I think somebody told him that he's not on the mortgage, so it doesn't really matter. And he's not on the note right now. He has to refinance it, so why should he invest more money in paying her mortgage? Bottom line is, mortgage guidelines are that the day the court awarded him the house, and he agreed to take over all the financial responsibility of the house, he's responsible for that mortgage payment. Whether he made it or she made it, he's responsible for it. So now he has a house that's pretty much in active foreclosure. It hasn't been paid for 5 months, so he's not mortgage eligible at all. And the whole situation is just bad.
Well, that's it seems like incompetent attorneys or I don't know how I guess if he came to you initially, you would have let him know you better pay that mortgage.
I wouldn't have known. That's the whole thing. We never would have known. We would have taken the application. It wouldn't have showed up on his credit report because he never had a mortgage on the property. Then we would have wanted to refinance or purchase. He would have said, "I own it." I would have gotten a copy of the deed from the attorney. Tyler kind of would have done the job. Then I would have found that, hey, there's list pendants on the house because nobody would have told me. And then I would have found out, how this all happened.
Well, you would have known because when you took the application, you would have said, "Is there any debt?" And then you would say, "Hey, who's paying that?"
He would just said, "Well, I'm not responsible. The ex is not on my name."
Did you get the divorce decree?
I wouldn't have known to get a divorce decree unless I had a conversation. He didn't ask me a question like that.
Oh, unless you had the conversation.
I wouldn't have known anything. He said, "I have a house."
So what did you do with this guy?
What I do with this guy?
He's going to have to take a hard money loan. Find a hard money lender who would take him out of foreclosure.
No, I actually told him to sell the house because what happened was he told me the reason why he wanted the mortgage was he wanted to pay off the old loan so he doesn't have foreclosed property, and he wanted to take an extra $30,000 and put some money into it and just sell it. Oh. And I figured out that the cost of taking a hard money loan or the cost of the litigation on the list pendants will be more than $30,000. And based on what he thought the value of the house was, I said, just sell it as is. I said, get the house on the market and sell it as is. I just told him to sell the house. I didn't want to take a loan because he wanted to sell it very soon.
Yeah, I hear you. So basically, again, it all boils down to communication.
100%. Okay, so that's great.
All right, it was awesome speaking with you.
Right.
1, 2, 3, let's go!